Hello, everybody. Welcome back to How to Trade. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. We had a lot planned for today, and we threw it all out the window because in the markets, when you're trading, life happens, things happen, and we've got huge news stories that are breaking across the wires right now. Number one is Iran launches missiles at the Israel. The IDF says this has driven the markets absolutely crazy. It started happening, I would say, a couple hours ago, but this latest report has sent crude oil another leg higher in what really is going to be a big-time trend day up and a big-time break. Full disclosure, I was listening to the squawk. I was listening to all sorts of stuff. I was trading crude oil before we came on, so I ran about 2 minutes late. You'll have to forgive me, but that sort of is life, and this is exactly what's happening here. And I gotta fix that. In any case, right here, this is your Dom. I had a big day trading crude oil. We had a macro level right here, crude oil futures. This would be the game. Huge breakout, huge trend day today. Millions of dollars have changed hands. Right now, the shorts are getting absolutely annihilated because this type of geopolitical event is a major market move. We're going to see everybody back in the room, JC and Martin. You'll notice we came right to our monthly 38% retracement, 71.16. I didn't even really get a chance to highlight this level and how good it was. I sold it earlier today, and I got to tell you, I haven't been that stressed out on a trade in a long time. And the reason why I was doing it was because that macro level really dictates policy for me. But this is a news day. It's another news day, back-to-back news days where you got Jay Powell came out and said some things yesterday. We're going to have to wait till tomorrow to cover it. But we're definitely looking at this Israel-Iran situation. I've been on this. I've been bird dogging this heavily, this crude oil market. Nice big rally this month. And this is an interesting dynamic we have unfolding. 71.16s were great shorts. They really were. Let's go right down to a 5-minute chart, and I'll show you what I mean. And this is sort of the Fibonacci's that I use right there. I mean, that was really great. I was short. I was holding shorts from 17s, and when we traded up to 36s, I didn't feel so good. I said, man, we're going to get really smashed here because I knew that if that level breaks, The next leg is up, and we're not going to stop anytime soon here in WTI crude. So right there, we got the big sell-off. I was fortunate, made some money there, came back. But the beauty of being a dynamic trader and a short-term trader and a thinker and the ability for you guys to really cash in where the institutions can't. Right now, the institutions are, they're long. They bought in. They said, okay, we're going to war. We've got missiles in the air. All these different things are going to happen. It's better to be long WTI crude oil than short. Well, of course, everybody knows that. But how do we get long as retail? Well, I showed you one entry point to the short, but right now we are just absolutely ripping high. It's hard not to kick yourself as a trader, but right there, I absolutely loved this compression. And I went long. Boom, I was long a couple different times right there. Once you break over a resistance level, it turns into a support level. And I have to tell you that right there, going into this right here, bang, this pullback right here, that one right there after our big sweep, that's when news came across the board that missiles were in the air. Bang, bang, big retracement, went for a ride there, ended up making a lot of money, and then adjusted our thinking. Dynamic, guys. Be dynamic, be dynamic, be dynamic. Pull back again to our key level. Key level lined up with 38% on our 5-minute chart, and that was the money long. That's the one we waited for. No pain, no gain. That's a fantastic trade. You're buying cars after a trade like that if you put enough leverage on there. Now, right now, what do we have happening? Right now, bang, what do you got? Spike low, spike high. We're driving higher. A 5-minute chart, and we're a dinosaur right now. And the reason why we're looking at crude oil is because it is moving and shaking. What would we be looking to do right now? 1-minute chart, buying pullbacks. Buy. 76. 76 is your happy zone right there. Bang. There's the hit. There's the bounce. 75. Pressure's on. Stick with it. Going against us right here to 50%. Just hang on a second. Give this thing a chance to rotate up. 62%. We're going to have to cut it off at 65. We're not interested in going for a ride here, especially if we trade back down to 17s. So we're on life support right here. We're going back. Bam. There's the hit. Now let's see what we get to the top side. 78, 79, print 80. Okay, there's 80. Look for 85. Is it there? Is it not there? What do you got to do right here? You probably got to get out. I don't know that I would hold much longer. This could be basing out. We could see a big retracement here. At least have it at break even right here at 76. Looking at 80s. There's 81. All right, still not out. 80, 81, 81, 81. Do we get it? Do we get a shot? Do we get a shot at 90? Do you get a shot at 90? That's what we're looking for. We're looking for the next big pop up. The buyers are in complete control because the news cycle is telling us exactly what's going on. And right there, you probably just racked it for a scalp and you're out. Could have executed it live. It happened too damn fast, guys. It happened too damn fast. So that's scalping. That is high impact scalping, and that's what this game's all about. I'm very passionate about the markets. Anna, good to see you. But this right here, this is the market driver. What the rest of what we had, planned really is moot. And just as soon as we sign off, what do you got right there? There's your big break on WTI crude at $10 a tick. That's a massive trade. That's a massive scalp. Be very careful if you're trading like that though, because you need to be a professional and you need to have enough money to go for a ride. It can be really tough. That's what everybody wants to do. They all want to scalp, and I say, take your time. That's high impact. That's tough. That's a tough way to make a living. But if you get on the right side of these markets on a mover like today, boy, you can make a lot of money. So I want to welcome everybody back to the room. Martin, good to see you. Mark Corp. Let's do it. Silver and gold are all over. We're going to be looking at metals. Hopefully we get on the right side of this thing. JC, JMG, good morning. It's been an active morning. I've been all over the map this morning trading with some real leverage. Today was, you say, Shane, yeah, it was a Tuesday. It's October 1st. My leverage was on, and I'm going to show you right now why you don't hold a 1-minute position thinking it's a position trade. Look at that right there. We're going to see some pressure. I'm buying from down here, 71.17s. We could get it. That's for sure and certain. So I'm going to be watching that very, very closely. Now, as far as what else we have going on today, if you want to trade WTI crude, feel free to check out Switch Markets. I want to talk about a trade follow-up because this one's coming our way. Now, I issued this trade idea yesterday, and it's one of those that I would be very, very careful by overlooking it. A lot of folks see these weekly levels and they ignore them. And they say, Shane, I don't care. I don't want to see it. It's a weekly level. I just showed you a 1-minute trade, and I showed you what it takes to do that. The question becomes, is there an easier way to skin the cat? Yes. Yes, there is. And the answer is longer-term levels for me at least. Right there, NFP week retracement buy in the US 500 is in range. Okay, what are we looking at there? We're looking at a 38% pullback bid. And if you want to take a good look at what our news cycle is showing us today, it means that these buying opportunities are more than likely headed our way in the next 24 to 48. Now, uptrend is still valid, still very, very valid for the U.S. 500. This is a market that I would be absolutely shocked if we see a major, major correction before the election. That being said, if you do see war escalation, and we're going to unpack the political situation in a minute, if you do see a big Middle East war escalation, and let's say crude oil right now is getting a foothold above 71, that 71 level, let's say we trade 75, 80, 85 going into the winter, that translates into about 120 next summer. And if, in fact, you do have a situation where there's an economic pullback, jobs, I'm not even going to cover jobs today. We're going to start talking jobs tomorrow and get you ready for NFP Friday. But I will tell you right now that we're probably going to start coming off a little bit in our equities markets. But right now, I'm still bullish. So 38%, 56.24, 56.25, something like that. Probably maybe 56.27.50. Pretty darn good entry right down there at 38%. This is the trade idea that we had on the board from yesterday, so I would definitely be checking that out. Now, as far as the rest of the week, we're going to go ahead and wait until tomorrow to outline all that. The news cycle is just way too important right now, and that's what we really need to be focused on. So if I'm trading the U.S. 500 today, intraday, what would it look like? Well, I mean, if we're looking 30-minute chart, something like this, what would our intraday signature be? And you'll notice my charts are running slow, and the reason why is they're darn near overloaded. They're overloaded with data. That's for sure. Let's go ahead and close. I got to close some of my apps, and I have a sort of a supercomputer. So in any case, this is interesting stuff right here. US 500 30-minute chart. What do you got right there? Spike high. That's the pre 30 minutes right there. Pre 30 minutes before that US Open. Spike low there. Pullback. It's a trend. It's a trend, and the fundamentals say it's going to get worse. So I would be very careful going long here, the U.S. 500. We want to see the big sell-off in U.S. equities, and then we want to jump in and we want to pounce, claws out, mouth open, ready to get whatever we need to get for the week. And I think we can make our weekly, maybe even our monthly P&L in the next 48 hours if we're on the right side of these markets. That's a beautiful trade. That's a nice short trade from 38%, and we're coming off in a big, big way. So I'm interested in that. I think that's a fantastic way really to be. I would be short from right up here, though. I think if you're short from there, barring a late day correction, you're going to be just fine. Let's go ahead and translate that to the E-mini NASDAQ futures. This was a beautiful thing. I was looking at this one earlier today. Now, with the NASDAQ futures, in really all equities futures, the reason why I have them on the board right now is because they're primed for a big move. We've got technicals. They're near all-time highs. We have a lot of room towards any meaningful retracement level. Okay, what else do we have? We have a news cycle that presents fresh geopolitical uncertainty because we're going to unpack that in a minute. I don't want to get ahead of myself. Not a spike high. That's the beginning of the U.S. session. Opening bell. Ding, ding. Let's get it on. Bam. Big time sell-off. Why? Geopolitical uncertainty. That news started breaking in the early U.S. session that we were going to see a kinetic exchange between Israel and Iran. There's your move. There's your pullback, and right there, 38%. That's like clockwork. Those are great trades. Now, I'm not saying you can make those every day because you can't. You need a market that's trending. You need a market that's driven by a lot of participation that's very, very efficient. So something like that's absolutely fantastic. 30-minute chart. We're going way down here for the NASDAQ NQ futures. A lot of people trade the NASDAQ. I will tell you from experience. Well, earlier today, I mean, it was absolutely crazy. WTI was crazy, but the NASDAQ was pretty crazy as well. Here's a daily chart. You can see we really broke beneath last week's low, and we're starting to really think about, how far we want to dig in to this rally that began in early September. So first trading day of October, it's an absolute light show out there. If you got hurt today, don't worry about it. Just make your losses manageable. This was a tricky day to trade. Hey, believe me, I was white-knuckling a couple of those trades because I was trading some size, and I was thinking, okay, here we go. We got to get this, and the market can't just rotate around because the ranges are too big. What I'm saying is you might have been absolutely right about your market calls today, and you still might have lost money. The problem with that's dialing in your risk. You got to be able to dial in your risk and also your leverage so you have a chance maybe to hold some positions into when they get profitable, taking draws that you wouldn't usually take. With the NASDAQ futures, that's what the game's all about. It's trying to figure out your staying power, how long you can hold a position, because this market will vibrate around and it'll be jumping 15, 20 ticks in just a few seconds. It's a madman. That being said, I traded it. I like it. I like it. What can I say? In any case, pullback zone right there. There's your NASDAQ. Your NASDAQ right there, 1978, 75. That's not too shabby. That's not bad at all. That would be a pretty good bid there. The other one would be your golden zone, weekly chart. If we take out that 19.7 level, look for a swift drop, and I mean a swift drop down there to 19.3, and then we'll pull our monthly and we'll start talking about what an overall NASDAQ correction looks like. If these fundamentals are true and we start trading back down into here, maybe back down in here, we're going to start talking correction. Correction's only 10% off your all-time highs. That's what the news media is going to be talking about. CNBC is going to be all about corrections. They're going to be talking correction probably as soon as tomorrow or the next day. Something to think about there. Okay, we wanted to do a little bit of scalping there. We sort of already did. This is interesting to me. Here's the Euro USD is absolutely falling out of bed. You can see the US dollar is gaining bids up about 0.6%, that US dollar index. Why would that be the case? Come on, guys, think. Why would the US dollar be up? Has nothing to do with interest rate expectations, although I'm going to show you those in just a second. It's a safe haven. Believe it or not, when things get bad enough, just what we saw during COVID, investors run to the U.S. dollar. Now, I'm not saying it's going to be that way forever, maybe not even for the rest of this year, but right now, this was one of those things that could derail that weak U.S. dollar is war, world war. That's what you're seeing right now. So the Euro USD, it's brought us down to 78%, which is right around that 110, that 110.50 zone, 110.46. I'm going to go ahead and load up, and I'm going to put a market order down. Let's go ahead and buy this thing at market and just see how this advances this during this session. Now, the reason why we would take that trade right there, take that bid. Number one, we've got a weekly level coming into play. Nice spike low there, spike high, pull back, 110.50, key level. Big round number, key zone, doesn't really get any better. Okay. Market's coming off big. Love my weekly levels. I think I'm going to take a shot right there from 110.50. We threw the trade down. Let's see how that works. But believe you me, I understand exactly what we're trying to get accomplished here. We are catching a fallen knife, absolutely catching a falling knife. I don't believe that this this Israel-Hamas situation or Israel-Iran situation is going to drive that many more bids to the U.S. dollar over time. I think that this probably is going to be the worst of it, but we got to wait and see. Anything can happen right now. The news cycle is absolutely fluid. And if you take a look at the Great Britain Pound USD, we got a real similar situation. Now, I was really looking at this 38%. I wanted that sell up there. We talked about that sell. That was one of our trade ideas. Really wanted to get that executed right up in front of 135, and we just didn't get it. So now the pullback is down there right around 50%. 132.18. I don't want anything to do with 50%. That's just my prerogative. Maybe you guys want to step up and buy 132s. Go right ahead. For me, I'm waiting for 131.75s. I want it right in the heart of that golden zone. Now, I got we got a question yesterday. Shane, what exactly are you looking for the golden zone? Golden zone, we made a YouTube video. Check out the How to Trade YouTube channel. Golden zone strategy between the 50% and the 62%. I'm looking to get long right in there, right in that 75, 77 area, right above 62%. I'm on this weekly retracement zone. I think you can get something done there. All right, now we did have a lot of pressure. Let's take a look at our WTI crude oil. And this is interesting stuff, guys. This is why I say if you get a pop like that on a 1-minute chart, take the money, take the money, take the money. Who wants to stick around here on a 1-minute chart? Why not wait? We know we've got long-term support down there at 71.16. We know we've got that. We know we've got tremendous volatility. I've got about an hour, 20 minutes left in the trading day. I think that we're in great shape right there to step up and maybe bid that again, 71.16. I'm certainly going to be looking at that late in the day. Now, we do get a lot of questions. We fielded them yesterday. Actually, I've been fielding them all week. We had a lot of really what I would call a great reception for, let's see. Here's a look at my E-minis. E-mini S&Ps. I was trading these earlier today. That 38% didn't really hit very well, but now we're breaking to the bear. Trend day down. Let's get rid of all my technicals, and let's go ahead and have a look at that 9 EMA. Let's go through it right here. I'm just going to go ahead and turn all this stuff off. All right. Price action. That's all we're looking at. And we'll get rid of the ADR too. All right, price action. That's it. 30-minute chart. Let's say I want to trade that 9 EMA strategy. What am I going to do? I'm going to go right here to my moving averages, just like on the video. It was really well received. I was glad to hear from a lot of folks that were sort of serious about trading, decided they were going to reach out and either like the video or hate the video. For me, whichever. Always be skeptical when anybody tells you anything. I'm very skeptical. When you take a look at something like this, this would be an example of a 9 EMA strategy that is very functional. Now, you'll notice this is the second day in a row that I've sort of directed everybody into the 30-minute time frame for U.S. equities. During the U.S. session, that's a pretty good place to start. That would be the area where I would be looking to execute something like this. And you say, Shane, okay, what do you got there? Well, if you remember, one of the strategies from the video was a pullback strategy. So clearly we're compressed, we're getting chopped up. And that was one of the biggest criticisms of the video by the folks that are in the comments section. By the way, I love you. Get in there. Tell me what you think. If you don't think it'll work, great. I'm going to show you right here how it can work very well. But take a look at what you got here. Well, you're going to get a lot of false signals and chopped out. Yeah, I am during the overnight when there is no volume. Let's put the volume up. There's no volume in there. You can't be trading a moving average with no volume in the market. That's not right. So in any case, you get that break there. And then finally, what do you get? U.S. Open, bang, you get the big runner. Now, you're probably not going to be able to sell down here. You could. Theoretically, you could. I don't like the trade location. I would wait for a pullback. So if I wanted to sell this thing, how would I have done it? There's my 9 EMA. We talk about combining other indicators into your program. You don't even have to do that in this case. Bam, there it is. Now, what are you looking for? You know that the market's bearish. Our fundamental read on a global uncertainty means it's very bearish. What happens? There's your pullback. Your pullback is right in the vicinity of the 9. Sell it. Got pretty good trade location right up there. Sell it. And you've made a decent amount of money on that trade. Now, personally, the way that I do business, you guys that have followed these streams are sick and tired of Fibonacci's, but this would be a way that you could dial it in. You could say, okay, well, I know my Fibbies, bang, I got a nice big run, and we're sort of stagnant right around 38%, 50% right here. You could short that. Why wouldn't you short that? You could short right on the completion of this bar as well. The point is, it's up to you. I'm not going to sit here and say this is how you have to trade the 9 EMA. You don't have to do that. But think about what we just did and go through the progression. The first thing I did was I picked an indicator, the 9 EMA. The second thing I did was pick a market. Why would I pick something like the E-mini S&P 500? Because it's active today. It's not flat. It's active. If you're going to trade EMAs, you want an active market. What's the third reason why I would trade it? What's the third thing that I did? I identified a market. I identified a time frame. I identified the time to do it. When would you do this? U.S. session. Why? Volume, movement, U.S. session. Gives you a better chance to succeed, at least trading these E-minis. Now, let's say we want to do something like this, and we want to go Euro USD with a 9. Well, let's go back here. Let's go back to this one. Let's go back to my other chart. Excuse me, I'm getting lost. Let's go right here, Euro USD. All right, let's pull it up. That's what our 9 EMA looks like with all my other indicators. Okay, that's great. 30-minute chart. It's been pretty good. You could have done that during the overnight. Why? You got volume. You got trading volume. Everybody came up. They showed up for the London Open and went, okay, yeah, here we go. Let's get into it. Use your head. I mean, I know there's a lot of folks that watch that 9 EMA video. It's the biggest reception we've ever got on a YouTube video through the first few days. Very happy that you guys tuned in. But if you want to really learn how to trade and put the time in and understand how to build something like a 9 EMA into a winning strategy, do some work, do some back testing, decide how you want to trade. And the last thing I would say about a strategy like that is, yeah, there's going to be a lot of fake outs if you're trading it during low volatility periods. And the other time you're going to get a lot of fake outs is when you put it on extremely small time frames. We can get away with a 30-minute time frame today on a Forex. I like 4 hours better, and that would effectively turn it into a swing trading strategy. But that's okay. All right, guys, we got some requests in there for gold and silver. Absolutely. If there's anything else you guys want to look at, feel free to reach out. Interesting, isn't it? The VIX, the volatility index, the CBOE volatility index. Why would this be up big today? Our news. There it is. Iran launches missiles toward Israel, says civilians take shelter, Middle East crisis. We've got video coming in. Not a real good situation. That's from 45 minutes ago. Let's go ahead and refresh this. Let's see. We haven't got any updates yet. Sirens. We've got sirens. So this is a very, very tenuous situation. This will be driving the markets. There you go. 12 minutes ago, almost 200 missiles reportedly launched from Iran, as Iran says attack was retaliation for Nasrallah killing. So the real question now becomes, if in fact any of the missile strikes, they could just be for show. They may not be effective. I know that that's sort of the situation we had earlier this year, but also it's going to be retaliation. It's going to be, does Israel retaliate with direct strikes on Iran? It's a dicey situation. And I haven't even talked politics yet. We have a vice presidential debate tonight that's going to potentially be a big market driver as well. So when we start looking at something like the VIX, that's exactly what we're talking about. We're talking about uncertainty driving the market. We're talking about uncertainty really bringing about what I would call volatile market conditions, make your hair fall out type of things. Believe me, I didn't feel real great about things today in a couple of those crude oil trades just because I didn't know what was happening. So you definitely want to be aware of this VIX right here. When you see a VIX spike, that's Wall Street's fear gauge. That means that there is palpable angst in the markets, and you're in a situation where you want to be very, very careful with what you do. For me, the recipe is simple. I try to get long commodities with great trade location, and I try to get short stocks with great trade location. That's that old KISS, K-I-S-S, keep it simple, stupid. I'm not the smartest guy in the world, but a couple of those correlations, you can put them together. You got a pretty good trading strategy. What makes you better than the competition's waiting for good trade location? That's why we use the technicals, and that's why we put our thinking caps on. All right, let me see. Kalani, let me see. Hi, Shane Verrier. I'm following your 9 EMA strategy. It's really awesome. Can you do analysis on the dollar yen and the dollar CAD on the 1 hour time frame? Absolutely. More than happy to look at that. I'll pull a 1 hour chart. Not really one of my favorites for the Forex, but I'll do it just to break these markets down for you. We're going to go over a couple things. I want to hit gold, I want to hit silver, and then we'll finish up with that dollar yen and the dollar CAD, because right now the dollar is going to be rallying against both of them, but we do need to break down some key technicals that you may be able to trade a little bit later this week. Huge week. Nobody was ready for this news today. I wasn't, and it certainly broke right during the U.S. session, which can make life difficult. All right, let's get on with it. Gold, let's see. What do we got for gold? Beautiful price action. I had this line in the sand outline. We talked about it yesterday. That was sort of your daily retracement, 26.32, 38%. I mean, that's an absolute banger. The news cycle definitely helped you. Gold's absolutely ripping. So for me, the strategy is simple, and we're gonna mess around with our time frames a little bit here. Clearly, I would love to buy down here again if I get a shot at that 26.33, 26.33.50, something like that. Spike low, spike high. Pull back. We missed it. Darn it. 26.55, 38% retracement. That's a beautiful trade. You absolutely crushed it if you got that one. I don't know if Mark Corp got that one, but if you got that pullback, Mark, that's well done. Let's see what we have on a 30-minute chart. Sort of your P formation. I haven't drawn this pattern in a while, but it's exactly what it is. I hate missing things, though, guys. I really hate missing things. P formation, nice run and rotate. It's a very bullish formation. So the real question is, okay, Shane, what do we do from now on in? And I would say, well, I mean, if it ain't broke, don't fix it. I would back off to my 4-hour chart and my daily chart. I would say, okay, on the 4-hour, what do we got? We got a high. We got last week's high coming into play up there. That's your all-time high at 26.85. Not really a doubt in my mind that we get there. Remember, my favorite topside resistance zone where I don't think we'll see any meaningful selling, 27.50. So how do we trade it? Well, we already sort of missed the 4-hour scalp. Do we still want it? You could do it. I mean, if you want to be aggressive, we could be bidding down there from 26.55s again. Yeah. All right. Thumbs up. Great job, Mark. Something like this. But, daily, I'd probably be looking at my daily chart saying, okay, what do I want to do now? I'm a big fan of simple, guys. Big fan of it. 38% right there at 26.32. I would be a bidder from there. I would not sell this spike high. I know it's topside resistance. I know we got a lot of smart money traders in here. That suggests that there's sellers dug in there, and I have no doubt about it. I would be very careful in this environment. I think we easily could see gold break and run. You're going to laugh at me for this. You could see gold break and run $100, especially if the retaliation turns out to be a stiff one from Israel. You definitely can see that. Let me see. JMO, hey, sir, where can I reach you? Come by the How to Trade trading room. Come on in. Send me a private message. Just click on my picture at the top of the screen. We got a couple pretty good trading coaches. We got Connor Woods and myself. Click on me or click on Connor. Send us a message. I'll get back to you, and we can figure something out, just to have a conversation about trading. In any case, right there, that's your big break. Let's get on to silver here, and then I'm going to hit those last two major pairs, and we're going to call it a day. I'm running long, but the news is too big, guys. Silver is a madman. A lot. I know. I used to know probably one of the top Elliott Wave silver analysts in the world. Gentleman was by the name of Ron Silverstein, and I actually had an opportunity to watch him work. He was in a project with my uncle, and I watched him do his Elliott Wave back when they had graph paper and they had to pull out the ruler and draw it. And I remember he loved silver. His last name was Silverstein. He loved trading silver. I will tell you that silver for me is definitely. I trade micros because it's so volatile and it's so expensive to trade. Full-size futures contracts, the margins are just huge. Anywho, right there, it's very simple. Weekly, 30, 31. I don't think you can go wrong really buying those. Can't really say that, but that's the truth. As far as what you want to do right now, on shorter time frames, stay out. There's no reason. The first question I would get is, Shane, why don't you run a Fibonacci right here? Doesn't really do us any good. If you want to buy, you could buy 31.25. You don't want that, believe me. You want to wait. Let's take out that swing low right down there, and let's see if we get any bidders to answer the bell right down there at maybe just above 30.80. I think that would be the play. I want to be long silver. I want to be long gold. And, of course, we can see big corrections and get swept out. But the important thing is that we stay long gold and long silver. It's just really hard to buy right now and hold, because if we get a big correction, we could be right about the market and lose money. And that's absolutely terrible. So that's what we don't want to do. Let's see. Interesting, though. Let's go back to this euro. What chart do I want? Well, that was a pretty good trade, wasn't it? There's an update on our Euro USD. Ignore the money. I'm not trying to wow anybody by saying we're buying race cars here today. But what I was really focused on was that level, and that's a beauty. That's an absolute beauty. 100, 110.50, 110.46. So you've already got about a 15 pip rally. Let's just see where this goes. And once again, these are demo funds. The white dom that I bring up, that's real money. Believe me, we'll get into trading the real money. There's no question about that. But good trade on the Euro USD. All right, let's get this is sort of let's see right here. I want to put silver on this 9 EMA because I'm curious about something. 4-hour chart. So if you're trading the 9 EMA, where'd you start your trading day? 7 a.m. yesterday, 7 a.m. last Friday, 4-hour chart. If you were last Friday, there was all sorts of chances to make money there. Now we've broken above. There was your above close. The question is if you're long, let's say on a 4-hour silver, which I think is the right way to be, stop loss is going to be underneath that swing low. And you're going to be looking to the top side. And, it really depends on how you want to build your trade. Is that a fixed risk versus reward, 30.81? And you're probably long from, you are long from right there, 31.58, something like that. Then you're going to be at least a 1-to-1. I got some criticism about 1-to-1s. Believe me, 1-to-1s you can make a lot of money trading 1-to-1 risk versus reward. In any case, you probably would be shooting right up here. You'd probably be shooting for the top of market structure. I think a lot of smart money guys would probably agree with that. 32.70. If you didn't want to do that, you could probably shoot for that area right there, 32.25. That could be big as well. All right, let's go through. We got a couple other ones. All right, U.S. dollar, Japanese yen, and the dollar CAD. Let's do it. Start with the dollar yen. That's a 4-hour chart for the dollar yen. Sort of real tricky. We got a new prime minister. In Japan. Brought a lot of action to the table. Right here on the 1 hour, you've got 1 minute. Man, I've been trading too much crude oil. 1 minute. There's your 1 hour chart. You're in absolute compression. So if I was looking at maybe this to trade this time frame, for me right now, I would rather be long. And the reason why I would rather be long is twofold. Number one, money's going into the U.S. dollar right now is sort of a safe haven. Number two, What do we want to do? What's that technical formation right there? On the 1 hour time frame, that's a hammer. Love hammers. Hammers are great reversal signals. Sort of working on a double hammer here. Maybe if you get 2 hammers, we'll have a chance to bid this thing and get long. For me, the way that I would do this, 4 hour chart, big time sell off. We were sort of sellers down in here, got chopped up a little bit. You'll notice that big move right there was an absolute, that's a monster. That's a big one. That's a big 4 hour candle. Last Thursday, bang, big move. We sort of stalled out in the golden zone. So if you believe that this move right here is going to continue down, then you got pretty good trade location from the golden zone. For me, I'm not in that camp. I think this was sort of a news-driven move, sort of a freak move. Typically, those get filled in. We say that the chain is thin in here. That means that there's not as many buyers and sellers at each order point. That's a sweep. That means there's usually holes in your market or a real thin chain. Well, I'll have to come up with maybe make a video just on trader nomenclature, but something like this would be more of what I would be thinking of. So my 4 hour chart right there supports the long thesis with those 2 1 hour hammers. That supports going long on this pair. In times of strife, I would bet against the yen. I don't think I would back it, but that's just me. It depends on where your goals are. Let me see, Gemmo. Yeah, just howtotrade.com. Let's go ahead. I'll put it in the link after. In any case, right there, that's a good look at how I would approach the yen right now. Now, as far as the dollar CAD, you picked a very good market to focus on because WTI crude oil is rocking and rolling. What's that going to mean? Typically, that's going to bring bidders to the Canadian dollar, the loonie. 7 to 9% of Canada's GDP, all right, is relying on fossil fuels. That's natural gas. That's crude oil. Look at natural gas. Natural gas is only up about 1%. But what's up in crude oil? Crude oil is about 3.5%. So interesting day. Sort of should get a little bit of pressure, I would think, to the bear on this pair. And look at what you have. A bit of a pullback. The trade's already gone. I feel bad even drawing the lines because I can tell you it was a good trade, but that doesn't help us right now. Spike low, spike high, 38%. That's beautiful. Doesn't get much better than that. What do we want to do right now? It's hard. It's hard because the market sort of tested our level. We're going sideways. We sort of got a daily doji setting up. Let's go down to a 4 hour chart again and have a look. And then I'll pull up a 1 hour time frame. The 62% golden zone worked to the short there, but you don't want to do stuff like that. It's too tight. 35, 39. It's really tight to be doing Fibonacci's there. The best thing to do is if you want to go to your 1 hour, where was our 9 EMA strategy? You definitely could execute it there. For me, if I'm looking at a 1 hour chart, you'll notice that it's the same as my 4 hour chart was, which is great. That's called commonality, which really plays into our fractal geometry discussion, which is for another time. But something like this, 135.19, interesting short. It's just already gone. What do we want to do now? I would still be bearish here. Believe it or not, I'd still be holding a bit of a bearish bias just because we had a nice big move on this 1 hour. We're outside of the lower Bollinger Band. We pulled back. We failed at 62. So if you're trading beneath 38, the trend is still extremely valid. If you're trading beneath 62, the trend is still technically valid. That's a key aspect. We have to really make that differentiation there. We're technically still bearish here on the 1 hour. What do I want to do from here? If I have to pay the mortgage and you have to make a play, more than likely I would sell it just because crude oil more than likely is going to get another pop towards the end of the day. That's what I would say. All right, guys. One last fundamental. We got a vice presidential debate tonight. It's going to be heated. Tim Walz and J.D. Vance. It's going to be extremely heated in the Israeli situation today. The Israel-Iran war, it looks like, is going to be front and center. This is going to be a supercharged debate. Expect these odds to change. Right now, Harris is sort of the slight betting favorite to win the presidency right now, but it's many people believe it's a total coin flip. Interest rates, you'll notice that we were already started to see. Yesterday, we were pricing in a 0.5 point rate cut in November. Jay Powell said yesterday we're going to have 2 quarter-point cuts in a row. You can see those odds have gone down. That's helped the dollar as well. But still, right now, this is it. This is the game. Iran launches missiles at Israel, the IDF says. Okay, got a couple other questions here. I'll drop the How to Trade link in the live chat there on YouTube. Very, very important. that you guys cruise on over. Send me a private message if you're interested in talking, or go ahead and send trading coach Connor Woods one. He's great. He knows a lot. As far as these questions here, let's see, Kalani, for crude oil, which time frame is good? What you're going to want to do on WTI crude, I always go through a multi-time frame. I start with my monthly levels. I traded a monthly level today. It was good to me. Monthly level, weekly level, daily levels, intraday basis. Then I go to a 30-minute chart. And the 30-minute chart from about 9 a.m. Eastern out to about 2:30 p.m. Eastern, that's my bread and butter. That's what I want to focus on. Why? Because that's where the volume is, and that's when all the players show up, and that's when everybody shows up to the dance. It's that simple. All right, guys, I want to thank you for tuning in. Thank you for bearing with me today. It's just been a supercharged session. Incredible news cycle. You still realize you're a trader when you see that action come in, you see a big news event, and the market starts jumping around, and then you have an opportunity to trade. Yesterday I didn't do much of anything, and today I've been trading all morning long, doing a million different things. Sorry about being on 2 minutes late, but I wanted to get that final report that missiles were in the air before we went live here, because it really was going to impact our analysis, and boy did it. All right, everybody, thanks for joining me today. Trade the action well. We'll be back tomorrow. We'll start talking jobs numbers, and we'll get you ready for NFP. Start talking more conventional type of stuff, unless all hell breaks loose tonight, and then we'll be breaking down probably war escalations a lot tomorrow. If you're trading right now, no joke, be careful. Watch the news. Anything can happen right now. Anything can happen. Trade well, and we'll talk soon. See you.